Hi, I'm Fred Tully and this is Alfie Fleming. We work on the fuel broking desk at Onyx Capital Advisory. Every fortnight we will look at what occurred in the oil market and give a brief report. So Alf, what have you seen this week?
This week we saw high sulfur fuel oil cracks rally, with June 380 cracks going from minus $6.05 up to minus $5.60, and June 3.5 barge cracks rise from minus $8.45 to minus $8.15.
What was the reason behind this, Alf?
So Asia's been suffering from a heatwave that has unexpectedly pulled in more high sulfur fuel oil for its cooling demand, which emphasises the depressed Singapore stockpiles, with inventories down 3.8% week on week. We also saw less cargoes being shipped from the US to Europe, which allowed high sulfur fuel oil to tighten in Europe. Plus, Kuwait Petroleum intends to cut high sulfur fuel oil production between May and July to boost gasoline production in its Mina Al Hamadi and Mina Abdullah refineries. This lowered the overall supply of high sulfur fuel oil, causing prices to increase.
And what about very low sulfur fuel oil?
So, with low sulfur fuel oil, we also saw that cracks were higher on this week. After a sell-off halfway through last week due to its cheaper demand, and with Al Zour refinery in Kuwait issuing spot tender 2 weeks ago. We also saw an abundant amount of exports from the US and Nigeria. This week we saw June Sing 0.5 cracks went from $10.65 up to $11.75, and June 0.5 crack go from $3.80 to $4.50. We see this due to weakness of Brent throughout the week and retractions from the sell-off from the week before.
Great, thanks Alf. We will see you in a couple of weeks for another insight into fuel oil.